All right, let's talk about a really interesting one today, WEX Inc. This is a company that finds itself at a fascinating and, frankly, pretty tough crossroads for any investor. The whole story is like a classic Wall Street drama, pitting a super profitable present against a really uncertain future. Okay, let's dive right in. So here's the central puzzle we're going to try and unpack. Is WEX a cash cow whose main business is basically staring down extinction, all because of a huge technological shift? Or is the market just totally overreacting, creating a deep value opportunity in what's actually a pretty diverse fintech company? This one question is really what makes WEX such a compelling story to look at from an investor's point of view. To even start to get an answer, we first have to pop the hood and see how this WEX machine actually makes its money. It's not just one thing. It's really powered by three very different but connected business engines. So this breakdown of their revenue tells you a lot right away. As you can see, the mobility part is the big one, bringing in a whopping 63% of the money. That's the legacy business we're going to be keeping a close eye on. But, and this is a big but, don't sleep on corporate payments and benefits. Together, they're more than a third of the company, and they really hold the keys to its future. First up is mobility. This is the OG, the foundation of the whole company. Just think about all the company trucks, the delivery vans, the government cars you see on the road. WEX is the company behind the payment cards and software they use to buy fuel and manage all those expenses. It's a huge, very established business. Next, you've got corporate payments. And their mission? It's pretty simple. Kill the paper check. They give businesses virtual cards and automated systems to make paying their suppliers way easier. It's a massive, kind of clunky market that's just begging to go digital, and they're right in the middle of it. And finally, there's the benefits segment. And this one's got a really unique model. It's a fast-growing software platform that helps companies manage things like health savings accounts, or HSAs. Now, here's the kicker. WEX has its own FDIC-insured bank to do this. That's a huge deal, and we'll circle back to why that's such a game changer in a little bit. Okay, so now we get how all the pieces fit together. Let's look at the bull case. Why are some investors actually really optimistic about where WEX is headed, even with all the obvious storm clouds on the horizon? Well, it all comes down to some pretty powerful competitive advantages. So it all comes down to what investors love to see, a good, strong moat around the business. First, you've got classic network effects. The more businesses use WEX, the more gas stations accept their cards, which makes the whole network more valuable for everyone. It feeds on itself. Second, and this one is huge, you have really high switching costs. Once a company builds WEX's software into how they do their accounting, it's a massive pain to rip it out. And all that leads to the holy grail, a nice stable base of recurring revenue. And if you want proof of that moat, just look at this quote from one of their reports. This is absolutely key to the bull case. Think about it. Fuel prices went down, which should have hurt their revenue. But nope, they were able to just raise their rates enough to more than make up for it. That, my friends, is what you call real pricing power. Okay, remember that bank I mentioned earlier? This is WEX's secret weapon. All that cash sitting in employee HSA accounts, for WEX, that's a huge, stable pile of very low-cost funding. So while most companies are groaning when interest rates go up because their debt gets more expensive, for WEX, it's actually a tailwind. They earn more on all those deposits. It's a fantastic natural hedge that its competitors just don't have.
All right, so that's the sunny side of the street. Sounds pretty good, right? But a stock doesn't get this cheap by accident. Now let's flip the coin and dig into the bear case. What are the giant risks that are keeping investors up at night?
And here it is, the elephant in the room, the single biggest threat to the whole operation, the electric vehicle revolution. Their entire legacy business, that high-margin cash cow, is built on selling gasoline. The billion-dollar question is, can they actually pivot to EV charging and make it work, and will it be anywhere near as profitable? That's a massive, massive uncertainty. And, the EV problem isn't the only storm cloud here, not by a long shot. WEX also has to deal with intense competition, especially from its main rival, Corpay. The business can get hit pretty hard in a recession. They're exposed to credit and fraud risk. Oh, and then there's the debt, a pretty hefty pile of it. So you've got this real tug of war, right? On one side, you have these powerful business moats. On the other, you have this massive disruption and a bunch of other risks. So what does Wall Street think? How is all of this conflict actually baked into the stock price? This really gets to the heart of it for any investor. Is WEX stock cheap for a very good reason, or is it just cheap. You always have to ask yourself, am I looking at a genuine bargain here, or is this a classic value trap that's just going to keep getting cheaper? And you can literally see the market's anxiety right here in the numbers. I mean, look at this. Historically, WEX used to trade for a much, much higher PE multiple. Today, that valuation has been squeezed way down. That's the market basically screaming that it's worried about the long-term future. It gets even clearer when you put WEX side by side with its competition. If you look at what analysts expect them to earn in the future, the forward PE, it's trading at a pretty big discount to its main rival, Corpay. And a big piece of that discount puzzle? Well, just look at the debt levels. WEX is carrying a lot more. But what does WEX's own management think? Well, they're putting their money where their mouth is. $2.05 billion. That's how much they're authorized to spend buying back their own stock. And that is a massive vote of confidence. It's the loudest signal a company can send that they think the market has got it all wrong. So where does all of this leave you? Well, the whole story of WEX really boils down to a handful of make or break questions. Your answer to these questions is pretty much your answer to whether WEX is an opportunity or a trap. Question number 1, and it's the big one, the EV transition. Can they really truly replace that super profitable gasoline revenue with something new from the world of electric vehicles? The entire long-term future of their core business really hangs on this. Question 2. Is Wall Street so obsessed with the EV problem that they're missing the forest for the trees? I mean, you've got these two other fantastic businesses, corporate payments and benefits, that are growing like crazy and have great futures. Is the market just completely ignoring their value? And that all leads to the final, ultimate question. Is WEX a classic value trap, a melting ice cube that's just going to get smaller and smaller? Or are you looking at a diversified, tough-as-nails fintech company with some incredible strengths that just happens to be on sale right now because of a problem that maybe is solvable? That right there is the investor's dilemma.